6%.
OK, let's bring into the discussion Chris Weston from IG Markets now in Melbourne. Chris, well, welcome to you. Well, we're kind of getting to grips with the earnings kind of thematic, which very much has to be front and centre. What do you make of JB Hi-Fi, given that fall-off in the dividend and given its shorted position? How do you understand the stock popping, just scurrying to shore up those levels ahead of ex-div or what?
Well, I think that we all know what's the level of short interest that's in JB Hi-Fi. I think it's kind of magnified by some derivative positions which sort of exemplify that a little bit. But I think you've got to look at the gross profit margins today. And again, this is very much like what we've seen with Downer, where just inline news, any kind of news that signifies that we're not, that you don't justify a terrible result, and you are going to get people looking to short the stock, close out those short positions. I think you've got to look at the gross profit margins down about 90-odd basis points. The market was certainly looking at more. The cost of doing business was up 53 basis points, but again, the market was looking for that to be higher. So I think those sort of things are looking very, very strong. I think you can look at the operating cash flow as well. That was a lot better. The grossed up operating cash flow was up 67%. Again, I think that makes up about it's about 170-odd%, 140-odd% of EBITDA. So I think those things in conjunction are pretty good. The outlook is okay, 3.3 billion, which is expected for sales for which is about 5.5%. But that's bang in line with the expectations of the market. So just with anything like JB Hi-Fi, anything that's in line will probably be enough in this market, given the pullback we've seen. So yeah, I think this it's not a brilliant result by any means at all, but I think in terms of the gross margins, the cost of doing business, probably better than what the market was positioned for, and I think it's just seen a few people close out those shorts today. OK,
and what about positioning in Downer, because you've just flagged that as well? That also got a very sharply positive reaction. Shares are up 10%. You've kind of flagged it, but was there anything in that result that was spectacular that could justify such a big move, or similar kind of thing?
Well, I think it just no bad news would have been enough to see this stock up today. But yeah, let's look at the net profit of once you take into consideration the post roads. If you look into consideration, take into consideration all the write downs these guys have taken. I think the significant items, about $82 million worth of significant items, 112. That was above the expectations. The revenue numbers were on a statutory basis 7.92 billion. We're up about 23%. Again, that was a better than expected number. They've actually brought their outlook higher than what the market was looking for. They're looking for their 2013 net profit outlook of 210 million. The market was looking for 195 million. So again, a good number there. But then you can actually look at the company from a balance sheet perspective. Net debt down 29%. You can look at the gearing levels now, at 19%. Very good numbers there. And I think probably the standout for me, and what the analysts will be looking for, is just this cash flow generation that they're getting. Operating cash flow up 96%, 364 million. That's double what the market was looking for there as well. So on a here and now operational basis, looking quite good. They've just beaten the expectations of the market. The balance sheet looks good. The mining EBIT side of things, if you break it down into divisions, their mining EBIT was up 45%. That was well above the expectations of the market there as well. So just coming from a situation where no news would have been enough, I think you've actually got a situation where their operating incomes right now is better than expected. Their forward guidance is better than expected, and their balance sheet looks relatively compelling as well. And I think there'd been a lot of analysts out there saying, we've probably got a neutral capacity on this, but we probably want to see a little bit more evidence before we start putting our clients into the stock. And I think perhaps there's an element of short covering coming through, but I also think there's probably an element of people saying, probably now's a pretty good time to have a little nibble at this stock going forward.
Chris, more broadly, just pulling away from all of that for a second, reports are that Germany might veto Greek aid. Does that send a chill wind down your back? Look, I mean, I think that's an issue. I mean, we did see over the weekend the numbers for January to June for their deficit targets actually coming out better than expected. But these guys have got a bond redemption, I think August 20. If they're coming out into the bill market, they're going to come out and issue just over 3 billion euros of bills to try and make sure that they're at least liquid until going forward. But they've actually had a bridging loan rejected by the Troika, which is
Very, very interesting indeed. And as we know, they've got to identify about $11.5 billion worth of euros worth of spending cuts for that deficit by September the 14th and September the 15th. Now, if they don't come up with those, effectively the Troika's not going to give them their next 31 billion euro tranche of aid, which then feeds into the argument which we were talking about the other day which the IMF have been alluding to, that there will have to be a second debt restructure. I mean, if you look at the EU and the ECB themselves, I think they hold about 180 billion euros worth of the 266 billion euros worth of debt going forward. So clearly they're going to have to take a write-down, and there will be a second restructure to the net present value of the current Greek holdings if they can't identify these levels. I think those comments were made by the Vice, or Angela Merkel's deputy, which shows that, you know, that he does obviously carry quite a lot of weight. The other thing that I'm looking very closely for is exactly what's happening in Spain. I think the Greek situation is really coming to a head now. Will we see a second debt restructure? Will we see something by the end of the year where the Germans just lose complete patience with Greece and just say, right, enough's enough, something's going to happen here? But I think Spain's still, for me, the bigger issue, what's going on. If you look at the move up we've seen in the last few weeks, or in the last few days in yields, up about 83 basis points, the market's starting to get a little bit kind of like, we're going to have to push Spain into actually achieving assistance. I talked about to Greece there. The bigger issue now is what's going to happen in the bond market. Are we going to see yields pushing back up again? And I think they probably will. Spain don't go to the bond market until end of September, early October, but they've got to raise about 40 billion euros of bonds to meet its funding requirements. Now, given that short time frame, that's going to be about double the actual issuance that these guys have been issuing this year. That's a huge amount of bonds that they're going to have to raise. There's no one out on the other side of that. We are going to see a lot of pressure. You've got to keep your eye on that bid to cover. That's going to be a big situation. But of course, we know the stigma that's going to be attached to that assistance that Spain are going to be looking for. It's probably going to mean a loss of sovereignty. It's going to mean that the Troika are going to be consistently in Spain like they are with Greece and Ireland and Portugal as well. And the Spanish won't like that at all at the moment. So it's still a bit hit and miss. Greece and more so Spain very much on the radar for the next couple of months.
So what about this? We were saying next couple of months. What about this week? Do you think markets will start to pressure Spain this week, or do we just kind of ride through on hope of central bank actions and keep that story kind of flowing for us?
Well, I think these markets are being very much supported by what's happening in the PBOC, what's happening with potential bond buying by the EFSF and the ECB, and I still think there's an element of support coming through in with the Fed potentially buying bonds in September as well. So I generally would be probably quite bearish on these global markets if it wasn't for these potential central bank actions. So I think you've got to look at the US data this week. There's European GDP numbers as well, which potentially could throw into the growth aspect as well. But yeah, I think I'm looking very closely at Spanish yields. The market, or the bond market, will look to try and push Spain into attaching assistance. So, higher yields could put further pressure on risk assets. Let's not forget the S&P is now up 5 weeks in a row. It's just continuing seeing inflows into this despite the slowdown we're seeing in global growth. So yeah, I think there's a lot of expectations. We've seen the Aussie open a little bit weaker this morning because I think there was big expectations that the PBOC were going to come out and cut interest rates over or reserve ratio requirements over the weekend. That hasn't happened. The market wants to see that happen sooner rather than later, and it's going to start getting disappointed if we don't see it as well.
Yeah, they probably had bigger fish to fry, like watching the Olympics, the officials,
exactly.
And all of that.
Exactly. And
yes.
The Spice Girls this morning.
Indeed, Posh is back, and friends, thank you so much. She held on tight on the top of that black cab. We will talk soon. Thank you, Christoph. Cheers.
Chris Weston from RG Markets, Melbourne. BlueScope Steel also forming a new coated products joint venture with Japan's Nippon Steel today, sending the shares sharply north. This deal worth $1.36 billion. It comes